When you play a game, your focus is on scoring. But what if someone is protecting silently the goal? Loyalty fraud and account takeovers are fast-growing cybercrimes. Today, I will have a look how banks can help to stop that sort of fraud before it hits. Is it a new mission or is it even a new business model? Let's ask our fraud expert, Dinto. You're the guy on the good side, I heard.
That is true. Yeah.
Did you ever play that game?
No.
Let's wait. I will score a goal now. Pam. Got it. Got it. What's going on in fraud at the moment?
According to the Global Payments Report, the fraud in e-commerce is increasing. The type of fraud also differs between the geography. For example, in Europe, refund fraud is most common, while in Latin America, credit card related frauds are more common. But in general, globally, merchants face different types of challenges for managing fraud in e-commerce.
How does fraud impact the merchants?
Imagine a situation, a holiday service provider. It can happen that a fraudster with a stolen credit card books a ticket today and fly tomorrow. So by the time the merchant has identified that this was a fraud, the fraudster has already enjoyed his vacation using someone else's credit card. In the end, merchant loses money and also the reputation.
But how can banks help to stop fraud?
Banks can spot suspicious patterns in merchant payments and can stop different types of fraud.
Let's imagine I'm buying an ice cream in my holidays. I pay for it and all the data is collected.
When someone pays, hundreds of data points are collected, and banks are able to distinguish between what a good transaction looks like and a fraudulent transaction. And based on this information, the scoring, the merchant can make a decision whether to stop such highly suspicious transaction or allow this.
But what's new now in risk management?
In earlier times, fraud engines were using rule-based models. But with the power of AI and machine learning, it is now possible to detect patterns in a fraudulent transaction. And the use of AI and machine learning together with the former rules is something very new in the market.
Now, how can merchants manage fraud efficiently?
The first component is maximizing the revenue by allowing more good transactions. And second component is minimizing the fraudulent transaction. And there is also one more third component, which is also the minimizing the operational cost involved in managing the fraud.
Minimizing cost means you need a lot of data points, but where do you get the data from?
When someone tries to purchase something, hundreds of data points are collected. And from these data points, it's able to identify or to make a distinction between what is a good transaction and what is a potentially suspicious transaction.
What can merchants do on their own side to reduce risk?
Fraudsters have become very smart. With latest technologies, they have also started using the smart technologies to do fraud. So merchants need to adapt. They need to upgrade their systems. The best way to do this is by using risk engines where AI and machine learning models that constantly learns new patterns to detect and to prevent fraud. And this is where banks can really help, because banks have a lot of experience in risk management, and banks can definitely help in managing, helping merchants to manage fraud in their transactions.
Fraudsters are getting smarter. What's about your defense?